Hi, welcome to Charts Chatter with Chatur Charts, the 16th June 2022 edition. With the Fed hiking rates by 75 basis points, the resultant impact was a bloodbath in equity markets in India. And this was not completely unexpected because based on the triple combo wave that we had kind of analyzed, a fall was imminent. Well, the only thing that one didn't expect was would that have been so soon and so huge. So nevertheless, we are where we are, and Nifty is almost close to the 14,900 to 15,000 mark that we are anticipating. So there's still more pain to come. And Bank Nifty is also about 7 to 800 points away from where we think it will eventually land itself in before it decides its further course of action. It was a bad day. It wasn't a very good day for traders, etc. But today was a trend day. So now, what is defined as a trend day? A trend day is a move, a massive move, either on the bullish side or on the bearish side. So today was a trend day on the bearish side, and perhaps one of the easier days to trade, in my opinion. Today, I'm going to showcase as to how, with just one single indicator, and a periodic 15-minute review, one could have easily traded both the indices without any nervousness. So today, let me demonstrate that to you as to how Nifty as well as Bank Nifty could have been traded. All right. Now, the single indicator that I've used here is the ATMA. And at some point in future, I'm going to kind of share with you as to why I consider ATMA a trader's best friend, at least for a day trader. All right. So if you notice that I haven't even kept the Bollinger Band on. So if we have to even keep the Bollinger Band on, we will see that, this was a breakout candle. The first candle at 9:15 was the breakout candle. Thereafter, at about 10:30, right from the word go, the price started collapsing. So this is a very bad pattern. This is a breakdown pattern. This is a false breakout or a bear trap. Bears often allow the price to reach momentum before they start hammering the price down. So if you see exactly at 10:30 a.m., the price moves below the ATMA on the 15-minute chart. So I generally like and prefer to use the 15-minute chart to trade because it is more durable than the 5-minute chart, and it gives a very, very stable kind of an approach for an intraday trade. And the other reason why I use a 15-minute chart is that the stop losses, etc., need not be kind of very sharp and narrow if you kind of put it on the 5-minute chart. So 15-minute chart offers much more leeway in that sense. So at 10:30 a.m., the price moves below ATMA. And the first four candles between 9:15 to 10:30 is proof enough that this kind of a breakout with the Nifty making a 140-point upside gap has failed. So this is good enough, and this is the best shorting point. And at some point, as I said, I will explain why ATMA is kind of so powerful and why does it work so powerfully. Now, if you notice that from 10:30 a.m., the price during the entire day on not a single candle has crossed the ATMA bar. The purple bar line that you see, which slopes down along with the price, is the ATMA. And there's not a single candle during the entire day that it has crossed. So it's easy to kind of track it at the end of the day and kind of show that, it did not do so. So if one were to approach it in a stage-by-stage basis, here is what is the best way to trade. So at 10:30 a.m., when price moves below ATMA on 15-minute chart, the price was at 15,734. So this was the best shorting point. And one had to naturally put the stop loss at 15,841, which was the day's high. So of a 100-point stop loss. And at 11:30, exactly 1 hour after passage of another four candles, if one were to simply review this chart, they would have noticed that another 100 points has got knocked off from the index, and now it's at 15,629. The only action that was necessary at this point of time was to move the stop loss and trail it to 15,735. So the point from where Nifty was actually shorted. So at least one will not be out of pocket. Should a reversal happen, or should a sharp reversal happen at this stage, or a pullback happen, then the trader is not put to any kind of loss. So the 100-point stop loss, which was put at 15,841, gets moved down to 15,735, which is more or less the price at which it was shorted. Thereafter, all one needs to do is every 15 minutes, just make sure that the price has not moved above the 8 EMA line. That was all that was necessary to be done. So at 11:30 a.m., another 90 points is lost and Nifty plummets to 15,550. Action number 2 at this point is to trail the stop loss, or I actually call it stop profit, because at this point you are actually 200 points in profit. So instead of calling it stop loss, I like to use the word stop profit. So the stop profit should have been just moved to 15,650. So which is another 100 points above. So at this point, if a reversal would have taken place, the trader would get at least 100 points of profit, because he has shorted at 15,735 and the revised stop loss or stop profit is 15,650. At 1:30 p.m., Nifty loses another 100 points. So you'll see that every hour, Nifty kept losing 100 points today. And it came down to 15,410. So here, the trader has multiple choices, either to kind of vacate the entire position and book the entire profit, or move the stop profit to 15,550 and stay put in the trade. At about 3 p.m., since today was an expiry day and many a times you see sharp pullbacks happening around 3 p.m., it makes wise sense to kind of square off the position. So ideally, this position could have been squared off at about 15,401 around 3 p.m. So this is how, by using just one single indicator on a trend day, one can really make decent profit in the index. The same thing one could have done even on Bank Nifty. So I will request you to actually open up the Bank Nifty on the 15-minute chart and plot it in the same way. You will find that even Bank Nifty has followed an exact pattern the way Nifty has done. And after a fall at about 10:30 or 10:45, there has not been a single candle which has crossed the 15-minute, the 8 EMA line. I do hope that this single indicator can become your best friend, at least on trend days. And I would really urge all of you to try it out. And if you think that you found this useful, please let me know. Please post your comments and suggestions. I would like to hear from all of you. Thank you so much and have a nice trading day. Bye-bye.